Jerry Buckley is a institution to himself in Washington.
Institutionalized.
He has Hill experience, having worked way back for a senator from Massachusetts, Edward Brooke, of whom, as a Massachusetts native, I am quite proud. Established his own firm, now 120 lawyers or so, with multiple offices. Highly, highly identified for all the right reasons with the fintech space. He is has been called, and I'll repeat it here, the dean of the consumer law practice in Washington. You know, I could spread that out to national. So what we're going to do this morning, in lieu of the Assemblywoman, is have a fireside chat. However, FDR couldn't make it, and you'll have to imagine the fire, right? Jerry will have to be the fire. So let me start it off. I'll join you up here in a minute,
Good,
if you don't mind.
Okay.
By asking you a question first. Of all of the people that you could have named your law firm after, why did you choose William F. Buckley?
Believe me, I do get the question of whether I'm related, because I am from Connecticut, and the other Buckleys are from Connecticut, but we're the poor Connecticut Buckleys, and they were the rich Connecticut Buckleys. And I want to correct another thing, because two of my partners are over here, and it would be unfair to say that I founded a law firm. I, along with others, built a law firm, which is about 140 lawyers, actually. And we have offices in Washington and L.A., an office here in San Francisco, just launched, really, and Chicago and New York. So, and a representative in London. And we are focused, as many of you in the room know, primarily on the retail financial services space, and do a lot of work in licensing and chartering and fintech advice. So, and I've spent a little bit of the earlier part of my career working on creating the e-Sign Act and the area of electronic signatures and records. We got that. I pushed for that, and John Cromer, who's in the room, who's on the board, was part of that effort too. And we thought we were going to really set the world on fire in 1999, 2000, and then the dot-bomb came. So it was one of those investments that you make, and you have to wait for a while for it to mature. But anyway, yes. You wanted to ask some questions, I think.
You mentioned John Cromer. Where are you, John? Shout out to John Cromer, and Michael Friedman, who is both on our board of advisors for OLPI, as is Marty Mitchell. And did I miss anybody else here besides Phil? I think that's it. They'll be filtering in during the day. So, big picture. We had the period of the Great Moderation, from the Depression to, say, the financial crisis. But during that period of Great Moderation, the regulatory pendulum swung many times. In the 60s and 70s, we had consumer legislation, Truth in Lending, Community Reinvestment Act, and so on. And then there was a period of deregulation leading up to the signature Gramm-Leach-Bliley Act, and then deregulation some more, leading up to the financial crisis, and then we all are familiar with Dodd-Frank. So from your perspective of so many decades on the scene, and the dean of the delegation, where is that pendulum now, and more importantly, where is its momentum heading?
Well, Con, I would say that the model of the pendulum swinging is one that we all have seen, and I have a friend who used to say that after a crisis, the regulators are the ones who come in and shoot the wounded. So there's this tendency. There was clearly embarrassment at the failure of financial regulation to prevent the last crisis. And that, of course, whether it's a pendulum, it's the sense that, wow, we didn't get it right, we've got to bear down harder. And so I think that there was, after the crisis, and with the establishment of CFPB, this sense that we have got to be aggressive. Remember, Elizabeth Warren would describe the CFPB as the cop on the beat, and they had the badge there. That was, and the Billy Club, they were going to bring order back to Dodge. And that pendulum did swing that way. The subject that I want to talk about today is not whether you have tough regulation or softer regulation, but rather I want to talk today about smart regulation, and that's something that we've been thinking about. And I'll let you ask a question, but I think that there has been some moderation with Kathy Kraninger coming in, the new Trump appointees, all of whom, no matter what you think about Donald Trump, are actually very talented people, in my opinion. Yelena McWilliams, even poor old Jay Powell, who's been beaten up by the president quite a bit on monetary policy, but Randy Quarles, who's his vice chairman, is for supervision very strong. A very strong group of regulators have come in. Are you?
Don't worry, I'm coming back.
All right. Do you?
No, this is a great segue to my next question, believe it or
Okay,
not.
go ahead.
Good. Are you done? Are you ready?
You
ready for
go
this?
ahead.
Okay. You ready for a lightning round?
I'm not
yes,
sure I'm
yes.
ready for a lightning
That's
round.
Are
Go
you
ahead.
all ready for a lightning round? Okay. I love it in class when I go to the students and I look them in the eye, or more often than not, they're looking at their paper, and I just stand there and stare at them until they do look me in the eye so I can ask them a question. So here's the lightning round. Jerry is absolutely right. It's all about smart regulation. Regulation is a political word that's used by both sides of the divide. By the way, did you hear it's a divided country? If you mention Alan Greenspan, there comes to mind free markets, laissez-faire, libertarian. If you mention Tom Curry, the former comptroller of the currency, I think the word to my mind comes creative. He did something innovative. Let's go through the current agencies and the characters. And Jerry, give me 1, 2, or 3 words that you think captures those agencies as in their current state. You with me?
All right.
And then I'd like to have some audience participation. And I might put the finger on Phil to start out, since he's the keen observer of the Washington scene, and see if what Jerry says squares with your views. Is that okay?
Well, you expect me to say anything bad about any of the people that I deal with on a daily basis?
Having known you for 40 years, I know you will speak
Candor
your
is-
mind.
oh, yes.
So since you mentioned Kathy Kraninger, CFPB,
came in without experience in the area, has, I think, done a very good job in ordering things in the agency and resetting the priorities toward more guidance and less punishment.
Okay.
But still has maintained enforcement actions as necessary. In our law firm, it might be nicer if she were a little more aggressive because we'd have a little more business, but still.
okay, there's a few more words than I allocated, but how about you all? The CFPB? Raise your hand. Anybody have a view on the Consumer Financial Protection Bureau? If I mention Richard Cordray, okay, we're going to comment over here. What huh? Aggressive. But how about currently? Not aggressive? Philip. Pardon me?
Focused on innovation.
Focus. Who said that? Nat Hope says focused on innovation.
Nat is a good politician, and he knows that Cordray is advising the governor on how to structure financial services in the state. So he says that he is
Okay.
an innovator, right? And
He-
and I'm sticking to it.
I mentioned Tom Curry. Moving on. Joseph Otting, the current comptroller of the currency. What do we associate him with?
Aggressive pursuit of his CRA objectives,
Aggressive pursuit of
and
CRA reform.
the first banker to hold the job in a while with insights into how the banking industry actually works in the field.
Very good, very good. Anybody else have a view of the current comptroller of the currency who regulates about 85% of banking assets in the U.S.? Come on now. See, now I have to move over here and ask somebody to volunteer.
You couldn't ask me on the last one. The last one I had an opinion on. No, I coming from Quicken and being in state government affairs, I don't have a view that I think would go counter to my good friend, Mr. Buckley.
Does anybody else have a view on the current comptroller of the currency? Oh, you're from the firm. I can't double up. You agree with him, of course. Yeah, John.
Defender of preemption and proponent of valid wood made. Very key stuff.
Good point. Excellent point for purposes of what we're going to be discussing today. Okay, how about the FDIC? Now that's a board, but we tend to think of the board in terms of the chairman or chairwoman, Yelena McWilliams. Jerry, what's your view?
Charismatic, the best regulator communicator I have seen in my time.
Amazing, amazing. Anybody seen Yelena McWilliams give a talk or testify? What's your impression, Peter?
I think she's, as I said, a great communicator, and she enjoys sort of speaking her mind and not kind of speaking in generalizations that many people in her position do.
Yeah, yeah. But does she have CRA reform as on the top of her list as Joseph Otting does at the OCC? Jerry?
Well, she's paired with him in supporting the changes he's proposed. I don't know that it was at the top, but she is on board with him. And it is not an area that is without controversy, let's face it.
Absolutely.
Other regulators are not of the same view.
Right. Let's move on. Since we're in San Francisco, let's talk about the San Francisco financial services regulators in general. And I know it's in flux because of all of the new laws and regulations yet to be written.
Well, if you look at the Fed, you've got Tracy Bassinger, who is in charge of supervision here. I have the highest regard for her. She's an outstanding and creative person who holds a lot of fintech meetings that are not unlike what you're doing here. And she's very strong. I think the Fed in San Francisco is a strong. They had a great data symposium in their LA branch this summer. They're thought leaders, and I think very strong. And within the Federal Reserve Bank of San Francisco is the lead on fintech, which is great for people in this area.
Anybody have another view on that to supplement what Jerry just said? Or how about your comments on the state regulators in California? Any experience with them?
Well, I love Jan Owen. She's a friend and a great person. She's moved on. I should let my colleagues who've worked more closely with him, Clint Rockwell, so we can call on Clint since John's already spoken.
Moving over to Clint now. Since Jerry is giving you an order, I suppose you can speak now, right?
I think so.
No, he gives me orders.
It's a tough situation, right? Because enforcement is so active. Manny obviously has a great deal of knowledge about how the industry works, but that kind of cuts both ways because I feel like in some ways he's not able to dip his toe in because of a potential conflict of interest, and so enforcement kind of takes the lead. And in other ways, he adds his very deep knowledge to the subject matter. So it's an interesting dynamic and shift that's occurring. And in addition to that, there's a lot of people at the DBO that are retiring. So either have retired or are retiring in a short order. So all of this change is occurring at a time where there's deep change internally. And that's made things just getting to settlements on existing enforcement actions or getting new licenses, which has traditionally taken 3 months, is now 6 months. Things like that can be fairly troubling.
Great. Excellent. Thank you, Clint. Anybody else have any experiences with the DBO that they can share with us by way of observations here? Anybody? Okay, let's go back to the Fed for a minute. That's an interesting animal.
And here's an alum right there. Yeah,
yeah, I worked
that's when
there
I
for
first
8
met
years,
Connie.
so
Was working there. Yeah.
No, but it's very interesting now because, as you probably know, Dodd-Frank created the position of vice chairman of the Federal Reserve for supervision. The perception was that the Fed had dropped the ball in the lead up to the financial crisis, so they created this special governor. One of the 7 governors is the vice chairman for supervision. And yet, when it comes to a lot of regulatory matters that impact fintech, Governor Lael Brainerd, who is a Obama appointee, seems to be the point person, particularly when it comes to payments. So is there a tension there, or any kind of a truce or a division of responsibility that you're aware of within the Fed?
Well, as you know, different governors take the lead in different areas, and that's historically been the case, as you know. So there's Mickey Bowman, who has the community banks and has that. There are various areas, and I don't think I would describe it as a tension, but obviously, Randy Quarles is, as vice chairman and in charge of supervision, is really one of the most interesting appointments, because he's a guy who is steeped in knowledge of bank regulation, has represented banks for years. In fact, the funny thing is, he is from Salt Lake City originally, his family, and the Eccles building, which is one of the 2 buildings for the Federal Reserve, is named after, I think it's his grandfather, or who was the chairman of the first chairman of the Federal Reserve. So he has a long family history with the Federal Reserve, and he's a very, very bright guy. He just announced his new strategy for making regulation more transparent, and giving, it's kind of regulation is for us lawyers kind of an inside baseball thing where we have the secret sauce, and if you haven't worked at the Fed and you don't have the knowledge of what the this precedent is or that was never quite written down or whatever, you have the inside track in helping people. Right. Well, Randy is not. He's trying to make the process and the rules much more transparent, and he gave a great speech at the American Bar Association Banking Law Committee in Washington that I would recommend anybody read. His outline of how he intends to change regulation. I think he will be a major force for change in bank regulation in the United States going forward.
Yeah, so in contrast with his predecessor, Dan Tarullo at the Fed, who was not the vice chair for supervision other than de facto he was. And if I asked for a one-word response from you all, most of you would probably say technocratic, I think, at best, right?
To characterize his view. His worldview was more to the left, let's say.
Yeah, right. So let me call your attention to this excellent report that was just produced by the Buckley law firm. It's called Financial Regulator's Dilemma: Administrative and Regulatory Hurdles to Innovation. And I think it captures much of what you were describing in terms of smart regulation versus regulation per se. But in that regard, the Trump administration issued an executive order just in January, I think about the same time as this, and basically they said to the administrative agencies, no more guidance.
I wonder if there's 2, because yours for some
Almost
reason
everything you do now has to be conducted under the Administrative Procedures Act with notice and comment, lead time, public participation, all this kind of things, which as a former regulator, I read it and I said, well, that's a little extreme because the best regulators give guidance. No, the best regulators understand what smart regulation is, and the best regulation oftentimes happens with examiners talking one-on-one with institutions that are their clients, per se, and giving guidance, But the executive order, as I read it, went in the other direction, more to the, if you'd pardon the expression, the administrative state or the deep state side of the world, which I know that is not what they intended. But I'd be interested in your reaction, Jerry, or any of your colleagues or anybody here to that observation.
Well, I think that let's talk about bank regulation and what it is. And why it's so important. In many industries are regulated. The auto industry, emission standards, safety standards, and so forth. The real estate industry, zoning, environmental approvals, and so forth. But the banking industry uniquely, and the financial services industry generally, exists because of regulation. There is a symbiotic relationship between the regulatee and the regulator. And without regulation, this industry wouldn't exist. So it's important to understand that symbiotic relationship. And the reason we wrote this report was that in the epicenter here in San Francisco and around the country, financial services is moving into the era of big data, moving into artificial intelligence, learning it using machine learning. There is a transformation occurring, and it's occurring out in the world where people are doing a lot of thinking about how they can do it faster, smarter, better. And at the same time, regulators, well, that's moving this way. Regulators are still on a linear path. And so what we wanted to do when we wrote this report was to try to find out what is it that was holding regulators back. Because, financial services is one of the greatest strengths our country has. We are able to be as powerful as we are in the world. We have created democratized credit and created the strongest consumer economy in the world, which is underpinned partly by our financial services system. So if we don't stay up with it and stay modernizing and stay at the forefront, we'll fall behind, and it will actually affect our own national strategic position. So we said, well, and now I'm going to introduce a woman named Joanne Barefoot, who is we shared an office in the Senate Banking Committee 40 years ago, and our careers have intersected many times, and we're good friends. Joanne has established something called the Association for Innovation in Regulation, and she has been working with regulators here and around the world to look at how we can bring regulation up to what's happening in the real world. She's worked with the Financial Conduct Authority in London, Nick Cook. She's worked with Singapore, and she's Dubai. She's literally around the world and with our regulators here looking at what can we do. And she asked me to join her in that effort, and we agreed, our law firm agreed, my partners kindly agreed, to, on a pro bono basis, work with her to interview on a no-names basis for publication the senior regulators and innovation officers at the various financial services agencies. These are the federal agencies. And we did these interviews over the course of 3-4 months, and we took what they told us, we laid the legal pinnings under it, and we produced the report that Con was holding up, and I have a few copies here if anybody is interested. Last week we unveiled it and had a meeting in the Rayburn Building on Capitol Hill. We had a large attendance of people who were interested in it, and then it was covered in the American Banker, and we're going to continue to work on it. Do you want me to just go on, or would you want to ask any question at this point? Well, I wanted to tell you about the methodology. And,
sure, proceed.
Yeah. So What we did is we went and we wanted to get a report from the regulators themselves as to what might be holding them back. And we were surprised by there were some different views expressed, but generally the views expressed had a lot of similarities in the various agencies. I would be happy to give you some illustrations.
Yeah.
So
Wonderful.
you brought up the Administrative Procedures Act. And, sometimes OMB may have a different view than the agencies themselves. So,
Often,
and that doesn't mean that the agencies always follow the guidance that comes from on high. But the Administrative Procedures Act was identified as one of the problems. And as you've very well noted, it is a long and laboring process to do an informal rulemaking, which involves notice of proposed rulemaking, rule proposal, gathering comments, digesting the comments, putting out the rule, and sometimes doing it more than once because you put out another rule because there was enough comment that changed it a lot. So it can take between 12 and 18 months, and it's a painful process. And the result is that there is a tendency on the part of the regulators to say, hey, I don't want to go through that. We've got a rule on the books. It's good enough. But what we heard was that was holding back the change that was needed, and it is clearly needed. I mean, I was present at the creation of many of the consumer financial services laws, whether it's Equal Credit Opportunity Act, Community Reinvestment Act, RESPA. I wasn't there when Truth in Lending passed, but I was there when all that happened. And, at that time, the computers at the Defense Department didn't have as much power as what's in my pocket. I mean, it was an entirely different world. We could do it so much better, but we don't because we're just stuck. And so not everything can be changed by regulation, but great powers are given to CFPB to make changes. Legislation, and in this divided world, it's hard to imagine legislation going through, but regulation could do a lot. And I think actually Elizabeth Warren's vision was that we would do a lot, but it hasn't happened. So the Administrative Procedures Act is a barrier, or at least a big hurdle. And one of the things that we heard from the regulators is maybe we should have a sunset on a regulation. So it has to be reviewed every once in a while. Maybe we should have a built-in mechanism requiring review. We had a lot of thoughts offered about how could we, and we have to be creative and think even broader, but how could we get over this hurdle? Another hurdle was the Paperwork Reduction Act. Again, put on the books to avoid drowning businesses in paper in requests for information. The problem is that now the burdens to ask for anything, even things voluntarily given by the industry, is so great that the regulators can't really get the data they need on a real-time basis from the fintech industry because it's too burdensome to make those requests. Something needs to be done about that. Another example is the federal acquisition rules. They are, they require bidding and so forth. And, we do get around this at the Defense Department, they have DARPA. When it's really necessary, we do get around it for national defense purposes and so forth. But in general, and what applies to the financial regulatory agencies is this burdensome process. So by the time they get a technology, it's already too late. They've moved on, and so they aren't able to keep up because of the federal acquisition rules, and they're discussed in this report. Another example, Federal Advisory Committee Act, which actually I did the drafting on when I worked in the House before I worked in the Senate. That is impairing the ability to have discussions with people on a regular basis because there's a lot of falderall associated with setting up an advisory committee and what you have to have on an advisory committee. And then last, and one that we had not expected, but actually was brought up by a number of the regulators, is a hiring and cultural problem. And it may be one of the problems that is the deepest. And that is that, first of all, getting data scientists who are willing to give up the money to work with the government is hard. But there are those who want to do it. But then hiring them is hard because of all the requirements in the hiring processes and preferences and so forth. It's very hard to get them, and it takes a long time to get them hired. And then once they're hired, it's hard to get them into the areas within the agency where they're needed. So that was noted. And then it's, the point we made before about where are we with the pendulum swinging. The general reward comes for rooting out evil, for finding problems. Examiners are viewed as doing their job if they can uncover some behavior or financial process that isn't right or they view as dangerous. And they've actually been given an awful lot of discretion in that area now because of the new laws. And then one of the things that Randy's trying to do is come up with some standards so it's not just the examiner doesn't like it, that's it. But the preference in general is toward be aggressive, find problems, you're doing your job, not find ways to innovate and make things better. And people that take that route are taking the risky route. And that's not the general disposition of people who are risk averse. And often risk averse people go to work in the government. And I worked in the government. I wasn't, I think there are many people who are very creative who work in the government, like Khan was. But it's, it is, so the question is, at the top of the house, can we get the regulators to spend more time thinking about leading and getting and encouraging taking risk for innovation?
One last question, and I'd like to open it up to you if you have any questions, but I'd also appreciate your observations on the question that I'm about to ask Jerry. Could it be that we are taking the wrong approach to regulation overall? In other words, we tend to think of regulation as a command and control phenomenon. The very word conveys requiring people to do things that they don't want to do otherwise. You're probably all aware of the debate that's going on now about stakeholder capitalism versus shareholder capitalism. During all of my life and Jerry's life, we've lived under a capitalist system that was shareholder-driven. We had a chairman of the Fed who, for 19 years, professed that the markets would self-correct on behalf of shareholders. All this derived from Milton Friedman, obviously. But last summer, and in days leading up to that, something very interesting happened. The Business Roundtable, 181 of the largest CEOs in the country, came forward with a policy statement, and it said, in essence, we have it all wrong, that there are stakeholders out there that we're not even inviting to the table. Things like customers, things like vendors in our supply chain, and others, and the communities in which they live. And we ought to consider that as part of our corporate governance, as it were, as part of our regulatory mission. Airbnb, for example, you may have read, is doing an IPO later this year, but they just announced that they're setting up a committee of the board of directors to represent stakeholders. And it doesn't appear to be just a gesture to the Business Roundtable. It appears to be a genuine effort to determine the interests of guests, of owners of their properties, of the communities in which those properties are. So that committee of the board is going to have a role in strategy, compensation. And you talk compensation, you're talking about getting the attention of CEOs and C-suite and everyone in the organization. So I'm wondering whether your organization and Joanne Barefoot's organization, and I applaud the effort entirely, I wonder if they have taken this on board, this idea of stakeholder capitalism, or whether it is treated as just a blip in the moment rather than a mega trend. comments from Jerry and then from you all.
No, go, they want to comment.
Anybody know what I'm talking about? I saw some nod over here.
I'm going to respectfully disagree about the APA. I feel that
Administrative Procedure Act.
yes, I feel that the APA is the mechanism by which the due process clause is implemented. And I think that I have a number of clients who have been on the receiving end of changes in administrative agency interpretations. And that's what the PHH case was ultimately about, right? There was a long-standing administrative.
But it wasn't done through the Administrative Procedures Act. It was done through an enforcement action.
Right.
And I want to make sure one thing is understood, though.
and hence the
I'm not
process.
saying that the APA should be done away with. I'm saying it has to be made more efficient. Go ahead.
It should be streamlined, and I think that informal communications from regulators are a wonderful thing, especially if they are done consistently. And I think that's one of the worst things, maybe the worst thing from my point of view that the Bureau's done, is quit talking to industry informally. Because it used to be that if you had a question about a regulation that the Fed had, you could call them, talk to a staff attorney, and they actually had a compilation. They called it the Notebook. Remember that? And so they'd have a meeting every Friday morning, and they'd talk about the informals they had, and you get consistent guidance. And when that disappeared, it was really hard to deal with the Bureau. So I think the problem is there are two problems. First, you're right. The APA is too slow. But an agency can put out emergency rules. Although I've been dealing for the last several years with a rule that was put out in California on an emergency basis in 1971. Quite an emergency. And so I think it's definitely it would be better. So the best thing are fast rules. The second best thing are fast interpretations. And in particular, public notice when there's going to be a reversal of an existing interpretation.
Any other quick comments? We're running out of time. I want to thank Jerry Buckley for sharing his wonderful perspectives and years of experience with us. Excellent indeed. And I want to thank you all for participating.